Time now for the Wall Street beat. Treasury yields hovering near their lowest levels of the year as traders bet on bigger U.S. interest rate cuts and the growth outlook gets gloomier in the United States. Joining us for more, Bloomberg's chief global correspondent for global macro markets, Liz Capo McCormick. And you look at the expectations changing in Fed funds futures. Curious from your perspective, there's a lot of cross currents in the market right now. What are traders most positioning for?
Yeah, so it's interesting. And like Katie said earlier, the market has definitely rallied mightily in the last weeks. But yeah, I think, some of my colleagues who do some great stuff on positioning, like Ed Bolingbroke, have written about how people are positioning in some hedges and wagers and options and other things for, maybe 10-year yields keep falling further, which seemed like that no one was doing that earlier this year, right? Everyone thought, oh, we're going to see more inflation, et cetera. They were going to keep going higher, but they've really turned around. So you do have some positioning turning to kind of wagers on lower yields. Not everybody, of course. There's still those shorts out there, but you're starting to see that pick up. But, there's a lot of cross currents. And, I think there's still a mix of views out there, as always.
Yeah, well, I'm going to ask you a really hard question. I asked this to Mike McKee the other day as well. How does the Fed make policy around the different narratives in the market right now? Because on one hand, you have fears about sticky inflation, of course, tariffs coming down the pike. That would speak to maybe holding rates. But at the same time, you have at the back end growth fears materializing in a big way. I don't know how you thread that needle.
Yeah, now let's see. I didn't hear what Mike said, so I hope I don't get myself in trouble. But yeah, I think that's a problem now. But for now, it seems like just by going through the Fed speak, I'm not a Fed whisperer, but they seem to still be saying, hey, kind of we have time to go slow. We're a little bit troubled by inflation, even though they think it's going to come down. They haven't really come out wholeheartedly and saying, hey, we're worried about growth, which they were for a while, right? It seemed like Chairman Powell was worried about the labor market. Now he keeps saying it's holding in pretty solid. But like you said, the market is trading real time off some of this data that's showing some signs of slowing and some concern that maybe what the new administration in Washington is going to do is going to actually hurt growth. So I think we're really watching the Fed rhetoric. And, we have the Fed's favorite inflation data on Friday. So if that keeps coming down, then like the folks at Morgan Stanley were saying today that, that might give the market some more mojo for yields to go lower. But if inflation is somehow sticky on Friday, it shouldn't be because the math kind of lays out from the other inflation figures we've had. But I think, Katie, you're going to see the Fed continuing to say, hey, we're kind of going slow. They really don't want to fail on inflation. But you're right. It's a little bit of a sticky wicket they have to balance.
Right.
But so far, they're not screaming concern on the economy.